Okay. All right, how's it going, guys? Albert, also known as Trader AD. This is going to be the second video of my beginner's course, my very beginners for the remedial, how to trade like me, or specifically how to counter trend like me. Now, if you've already watched the first video, you understand why I would choose this method. And contrarians would say that trend is your friend, but personally, I believe that the majority of people that have tried trading often find that they feel like they're late in the game. And counter trend is a very good way of watching the movement, watching things build up in the chart, and then you find your entry, execute, and you exit. And that is why I think that this strategy is beneficial for those that feel like they're always too late. And I'm one of those. So other than counter trend, I still use all the other strategies. There really isn't one strategy that's better than the other. It really depends on your personality. So if you're, let's just say you're an impatient person, which I would assume the majority of day traders are, because we're not the type that we want to invest on a short term or a swing trade. Some do, some do all sorts of strategies, including swing trading. I used to do swing trading in high school, and I found that I'm never that comfortable sleeping, especially if I'm trading a little bit larger than comfort, and finding the next day that it gapped down or something like that if I'm going long. So with that personality, on the extreme end of the spectrum would be a scalper. And scalpers, I know a couple that have a 95 percentile success rate. There's nothing wrong with scalpers, even though you would hear a lot of people say a lot of crap about them, but they are considered traders, and some of them actually make a hell of a lot of money. So at 95 percentile, it shouldn't be that hard to believe that I am roughly in the 90 percentile when it comes to success. That is the only reason why I would actually feel comfortable enough to teach this strategy. With the other strategies, you can make a lot more, possibly, but at the same time, you're going to have a greater chance of failure. So, as a beginner, I feel like success contributes to the psychology of trading. As we are born and raised, we're always seeking perfection. At least most of us do. And because of that, that can really destroy your game in trading. If we're always trying to seek something in the A, then we're always going to get, well, we're going to get upset. And when we get upset, we fail. So a lot of us have adopted this mentality of the all or nothing. And when that happens in trading, you're probably going to get nothing, because you're never going to get everything. So you never see home runs, basically. So in this video, I'm going to talk about candlesticks, and I'm going to talk about how to read a candlestick. I had a student, a special friend of mine, a former high school student, asked me about candlesticks. So, well, specifically, she said that she's learning Forex, and she knows that candlesticks exist, but she prefers using the line graph. And not that there's anything wrong with the line graph. If I'm trying to look at something at first glance, line graph is perfect. But with candlesticks, it really contributes to my counter trend strategy, because I'm always looking for trend lines. And with candlesticks, I can find plenty of trend lines that benefit me to find my executions, or the actual reversal area. So yeah, let's get to the computer and I'll show you what I'm talking about. Okay, so generally speaking, when we talk about candlesticks, we're talking about a wax and a wick. It's going to be a cylinder, or if you look at it in two-dimensional view, it's going to be a rectangle, and there's going to be a wick in the middle. So as the wax melts, then it reveals its wick. When it's brand new, we don't see a wick. So let's just say that what we see right now is the very opening of a candlestick, and this candlestick goes straight up, and when it goes up, it grows up, so it's going to be green. So with this candle, let's just say this is in the 1 minute time frame. That means each candlestick has an open and a close, a high and a low, and there's going to be only 1 minute per candle. We call these candlesticks that are very green bullish, because bulls like to spike things in the air, like clowns and cowboys and cars. Now with the second candle, it opens right there, and it starts going down. That means at that moment in time, it was probably red, or it was definitely red. And let's mark that area. But within that second minute, it climbs all the way up to this point, and before the third minute, it closes right there. So we have something that looks like this. We have an open, it grows up, and we have a low and a high, and a close. So that is basically a candlestick with two wicks. Pretty much every trader's lifestyle, burning on both ends. Okay, with this third candle, you already know it's going to be red, but it goes up first. So it opens, it goes up, so at that moment in time it was green. But then, within that third minute, it decided to go all the way down to this point, and it closes right there. So we have an open, a high, a low, and because it goes down, it bleeds down and it's red. Now, when it's red, we call this bearish because you're supposed to crawl in a fetal position so the bear can just squish you into a little bloody mess. The fourth minute, it opens. I have this black for a reason. It goes all the way up, so at that moment in time it was green, and it hit those highs, and it went all the way down to hit the low, and yet it closed at the exact same place it opened. This is what we will call a doji, and we have a really long wick and practically no body. And the very fifth minute, we have something that goes up, all the way up, and it closes right there. So this one is basically a typical candle with no wick at the very bottom. But it is still green because it closed higher than the open. Now if I take the close of the fifth candle and the open of the first candle, I can create a compilation of a 5-minute candle. Now remember, I had talked about time frames. I used the 1 minute, the 2 minute, the 5 minute, 15 minute, 1 day. Yeah, and that's pretty much it. So some people use the 3 minute. It all depends on how long you want each candle's time frame to be, more or less. But these 1, 2, 5, 15, and daily seem to work fine with me. So in this case, we're going to create a 5-minute candle. 5-minute candles means that there are 5 1-minute candles, and that they're all going to share the highs, the very highs and the very lows, but there's only one opening at the very beginning of the first minute and close of the very 5th minute. And we get a candle, because it closes higher than the open, it's going to be green. And there seems to be no wick at the very bottom because the bottom happens to be the open. The very low happens to be the open, and there is a wick at the very top that is shared amongst the four 1-minute candles. Putting that aside, if this was a compilation, these 5 minutes were put in a line chart, it would look like something like this. A line chart only takes the close of every minute. So the very first minute, it'll start there, it'll go over here. Third minute will be right there, 4th minute, and then the 5th minute. Now with this, all you really see is basically a shared trend on the 3rd and 4th minute. But with a trend line with the candlesticks, we have 1, 2, 3, 4, 5 trend lines. Now this is important because every day that we create another candle, as it develops from the open to the close of the market, it uses the trend lines to determine resistance areas. And oftentimes, if the chart is moving too fast for itself and hits something in the daily chart or the 15-minute chart, it's going to find some powerful resistance. So here's an example of DAL. Now on the left hand side, we have the chart developing. You can see a lot of volume growing in this chart as it hits that certain area. Now that certain area is being projected on the right hand side. That is the daily chart. So that is already completed, by the way. So you won't be able to see the action within that one candle. That candle has closed. But within that candle, it had resistance right there. And if I draw a line, you'll see that it actually touches some areas of the daily chart. And that really gives you the conviction to know that this specific area was a point on the daily chart, basically a trend line, a resistance area. So all the buyers and sellers, all the shares are being thrown around back and forth as it hit that one area, and before you know it, it decides to tank because it just couldn't break through that area. So people started to panic a little bit, and they sold all their shares, and it goes straight down. Now this one, as I mentioned, you won't be able to see it in the closed daily candle because it wasn't over. So oftentimes what happens during the intraday inside that daily while we're trading, it will hit that resistance, but eventually it may decide it needs to go higher. You know, in this case, that's what it did. But this was enough conviction for me to understand that there's a potential for a reversal. And for that moment in time, you can make a good decision on entering and actually making a profit on something predictable. Now with this one, LVGO, these weren't too long ago, by the way. Again, you have a static daily chart on the right hand side, and you have the chart on the left hand side. You see the ramp in volume, meaning a lot of people are throwing around a lot of shares trying to figure out if they want to buy and sell. And at one point in time, there were plenty of buyers and sellers, and the sellers lost, and they started covering their shares, and it starts moving up because the nosedive was just too much. It needed to backtrack a little bit. So this was a bounce, a very nice one. And if you look at the daily, you can almost see where it would actually go. But if you look at the 15-minute, you can see a lot of candles touching that area. So that was a very special area in the 15-minute chart for you to determine the possibility of it reversing at that point. And I made a little bit of money on that one. So other than talking about trend lines, when it comes to the candlesticks, we have to understand that as humans, we want completion. That is why trend lines are so important. When we see something that we can touch, we want to touch it, more or less. So imagine a stock that's having a great day and it's at $99.80, and 5 minutes ago it was $99. Now where do you think it wants to touch? What is a perfect number for you? 100, right? So it's going to want to hit 100. That is basically what happens all the time. Now if it hits 100 too fast, it's going to ramp up, maybe pass it up, and it's going to dive back down. That is another really powerful pivot point. So $1, $2, $3, $5, $10, $20, anything that is a whole number, multiples of 10, multiples of 5, all of these are going to be very powerful areas to pivot or to counter. So if you see a lot of volume ramping up as it approaches this number, rather than just having a linear grind going up and down, resetting itself every 5-10 minutes, if you see something like that, you'll never really know when it's going to counter. But if you see something just progressively move straight up, then you can almost predict, especially with the amount of volume, that it's going to have to reset itself. And that is basically what we're looking for. A very, very large reset, not baby resets. Those are still considered counters as well, or reversals, but we're looking for the big one, because that way you can exit or you can execute this trade late and you're still able to make a profit because there's still some movement left in it. There's still some elasticity in that rubber band, and we'll discuss that a little bit later as well. So I hope this was a little bit informative. I am constantly showing everybody in the streams how I look at the daily, how I look at the 15, then I'll look at the 5s, the 2s, and the 1s. Now if the one chart looks dirty, meaning it's red, green, but it's actually creating the shape that I want, I may look into the 2-minute time frame to collect some candles in which I would eliminate some of the discoloration, if you will, and see a little bit more of uniformity. The 5 minute generally shows a lot of uniformity, but we don't want to look too far away when we execute a trade. So if you like to see more of this, I'm always on the Discord app, on the chat room, at least right now, subject to change of course, but at this moment I am on the Discord app, and oftentimes I will share with you my trade ideas, then the Benzinga, and I'll tell you what I'm looking for, I'll show you why I think it's interesting, and I'll tell you when I enter and exit. But as we continually see these things, you'll understand why I'm so confident in knowing why it's a 90th percentile, because it has been for the past, I don't know, past 5 years, I think. So feel free to join me, and if you think this video was helpful, like and subscribe. I'm going to create my third video. I think it's going to be about level 2 and time in sales, or I'm not entirely sure, but we'll see. Alright, take care guys, and I'll see you next time. Bye.